Every retail Forex trader that I come across in Asia, in Europe, anywhere in the world, there'll be traders who use candles. And what I'm going to do now is compare the use of candles against point and figure. So let's take a look at a nice chart. And I picked a piece of chart from mid-November last year. And we can see a lovely big candle, a nice uptrend. This is a 4-hour chart, so we're looking at 1, 2, 3, roughly 4, 5, about a week and a half, but a lovely up move in dollar yen. Now, for me, and I think for most traders, it's difficult to tell exactly when to buy. What price do you buy at? Do you have any idea? As there's no exact price signals, and we're told for confirmation of movement, we have to wait for the next candle. But let's take a look at the same piece of chart in point and figure terms. And we can see, if we take a look at the chart, we get an exact breakout buy signal. There's one, okay, this is a 20 pip chart, and we get that at 103.60, and we go up. And remember, this is 20 pips, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's a 200 pip move.
This is the same chart that we see before?
It is. It's the same, but in point and figure terms against the candle. So we compare the two. And what point and figure does, it tells you exactly when to buy. Here's another buy entry that gave you another 20, 40, 60, 80 pips. Another buy entry, 20, 40, 60, 80, 100, 20, 140, without a correcting box. So it's telling you when to buy, exact entry points. Now, I'm the sort of person, I need to know an exact price. So it gets you in an exact price. And in trading, this is important. We're not doing something that's based on emotion. Every single trade that you do with candles is a guess. You don't know what's coming next. It's based on an emotion. Every trade I do with point and figure is an exact price-based plan, never a guess. Okay? And if we look at a real chart now, a recent chart, here's a dollar yen trade, and we can see an exact entry point, okay, on a 10 pip chart that led to a 100 pip gain. There's 10, 20, 30, 40, 50, 60, a small correction, another little down move, and finally over 100 pips without a buy signal. These are the sort of signals you want to receive. You want these signals early, and you can see you've got an early signal. We don't have to wait for confirmation candles because point and figures told us this thing's going down, it's time to sell. It's that simple. And if we go back to our original dollar Swiss chart, we can actually identify the moment, the single moment where we get our first buy signal. Our first buy signal appears here at this point, and it tells us, hey, the down move's over, even though it went another 20 points lower, and then we bounce off a triple bottom here, and we get another buy signal. That buy signal was worth 190 pips, that buy signal was worth 180. These are big positive signals. Look at that lovely up move without a correction. Small correction, lovely up move. And if we look carefully, we can see a little triangle formed. Okay, and at the end of that little triangle, we had a bottom, another buy signal, and then we had another 70 pips. These are huge signals, and you're seeing them every single day in point and figure. But point and figure does much more than that. Point and figure helps you trade. It helps you identify support and resistance. We can see the support here on this cable chart rather. We see some bottoms, there's another double bottom there. But look at the top. It shows you the exact area where you should be selling the pound. It tells you where, hey, the market is very heavy. And finally, we get a sell signal, which gives us another 80 pips or so. But it tells us resistance levels. It stops us from making stupid mistakes. Most people Most retail traders look at that chart and say, hey, it's going up, it's going to break through. Point and figure traders say, hey, it's reached resistance. Maybe we should be thinking about taking profit, and eventually there's a signal to go short. It's hugely advantageous over candles. We don't wait, we see the price, we sell. Now, let's take a look. Here's a dollar yen chart, and we can see clearly the level of support here. There's the support. Even when it's sold down, the support's here, and then we have the areas of resistance. Okay? Why is support and resistance so important? Well, support and resistance is telling you to buy low, sell high. It's a fundamental economic rule of trading. It's helping you. It's telling you where you should be selling. It's telling you where you should be buying. And then you get the confirmation signals. There's your first buy signal. There's your sell signal. There's another buy signal. It's telling us everything we actually need to know to trade, make money, and be successful. What happens when support breaks? Another basic rule: when support breaks, we can see the area of support here, the buy signal, run all the way up, the resistance, the sell signal, and the break. When support breaks, it becomes resistance, and we can see when it was retested 1, 2, 3, 4, 5 times. 5 times the resistance held. So when support breaks, it becomes resistance. And of course, if that's the case, the other way around, when resistance is broken, it then becomes support. And here's the breaker resistance here, the run up in euro sterling, and there is the support. And this is a vital piece of information. This is going to help you trade. This is going to give you a whole strategy. And as you remember earlier, my friend here asked me the question, and he can repeat it if he wants, what time frame do I use? Okay? Now, the time frame I use, and if you look at this point and figure chart, and this is a real beauty. All right? This is a lovely chart. We had a sell-off, we had a base put in, and a huge rally. This is dollar yen again, UJ. And we had a number of tops, another huge sell-off. And the time frame took us from dollar yen 109 to 114 back to 110 is really, really important that you understand how I trade. If I put on the trade signals, now we see the major trade signals, and here we are. There's your sell signal. Okay, that's worth, I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9. That's worth 200 pips. There's your buy signal. There's a quick 100. Another buy signal. Another 100. Another 120 or so. Another 120. Then we had the tops in place. And here's the first sell signal to tell the buyers the game is up. It's all change. It's all change. And then we receive another sell signal and the major sell signal here, which is a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15, I don't know, about 250 pips on the downside. And quite simply, if we just followed those trade signals, we'd make somewhere between 800 and 1,000 pips. And by learning the signals, by learning the simple patterns, we can spot the tops, we can spot the bottoms. And the answer to your question, the time frame was quite simply no time frame. Okay? In point and figure, time is irrelevant. And I keep asking myself in trading, why should time matter? Well, what do we do with time? We measure time to measure price, so that you can make your pretty patterns, your candles on the market movements. And you use those patterns to make your trading decisions, but are they really relevant? And when we look back to the last Federal Reserve meeting in, where were we, July, and it took 2.5 days to go from 111 to 112.20. And that was before the last Federal Reserve meeting. But then it took 2 hours to go from 112.20 back to 111 after the meeting. So is time relevant there? Did it matter? Well, time doesn't matter. It's not matter. Time is of no importance in trading. It's about one thing and one thing only. It's all about the price. So point and figure, we have no time frame. We don't care about time frame. All we follow is the price. I enter at 111. I want to signal at 111.10 or 20, and I want to sell at 112. That's all I care. That's my entry is a price, my exit is a price. Not 4 hours, not 2 hours, I don't care. So it's all about price.
How do we recognize the entry point and the exit point?
Well, it's in the patterns, clear patterns, and we'll talk about that in a few minutes' time, okay? The trading signals is what we need. And we need trading signals from price, not time. And point and figure will give you the exact price signal at the exactly right